I'm Mark Learmonth, Caledonia Mining's CFO, and I'd like to run you through our corporate presentation. What you see here on the front page is the new headgear, the central shaft, which is the culmination of 6 or 7 years very hard work, and it's something we're going to talk about at some length in this presentation, but it's something we're very proud of. Moving on to the next page, there's a disclaimer which you're aware of. Our strategy on page 3 is really focused on four areas. The first is completing and converting the central shaft into a producing asset. So that's near-term low-risk growth. And that will give rise to a significant increase in production. In 2020, we did about 58,000 ounces. This year, in 2021, we're looking somewhere in the mid-60s. And then 2022 onwards, we're looking at 80,000 ounces of gold per annum. So a fairly significant step up in production. We've demonstrated over the last several years a commitment to return money to shareholders by way of dividends. And again, more detail on that later on, but we've been increasing the dividend now consistently for a couple of years. And on top of that, we feel we've got some very attractive new opportunities in Zimbabwe where we can redeploy some of the excess cash or surplus cash that we're generating from Blanket to give rise to hopefully future growth. So by way of an overview of Caledonia, we're a highly profitable cash generative gold producer based in Zimbabwe with a strong growth profile. Our producing asset is the Blanket mine in the Gwanda Greenstone Belt towards the south of Zimbabwe. And then in addition, we also have an exploration option agreement in the Midlands over Connemara, and we recently we're in the process of acquiring some further claims in that Midlands area. That's the Marley Green asset. We're a Jersey Channel Islands domicile company, which means that our dividend distributions don't incur withholding tax, and it's a tax neutral jurisdiction for the parent company. Listed on NYSE, which is where the bulk of our trading volume is, and also on AIM in London. At the end of June, we had about $16.7 million in cash and no debt. On an annualized adjusted basis, we're on a PE of about 4.7 times adjusted Q2 earnings, so a very low PE ratio. And in 2020, we had revenues of bang on $100 million. We've got M&I resources of about 902,000 ounces. And further inferred of about 866,000 ounces. That gives us a life of mine, including inferred out to 2034. And as we do believe that we've got significant potential to extend that mine life through on-mine exploration at depth. Now let's just talk about the dividend. We've been paying a dividend, I think, since 2012. And it's been from 2012 really until sort of 2019, it was pretty much static at just less than 7 US cents a share. And then from early 2020 onwards, as we were getting towards the end of the capital investment program at Blanket, and also as we could see the higher share price, we started to increase our dividend. And most recently, we've now increased our dividend to 14 cents a share, 14 US cents a share. That'll be paid at the end of October, which effectively we've more than doubled the dividends since October 2019. The dividend costs about $6 million a year, and as you should be able to see as we go through this presentation, that's a relatively small proportion of the cash that we expect to generate from the business. So we have plenty of capacity to increase the dividend further as we convert the central shaft into a cash generative asset, and also to deploy some capital into the new projects that I'm going to talk about. By way of corporate overview, our share price, you can see our share price graph. Our share price did run very hard in mid-2020 as a result of the inclusion in the Russell 3000 index. The gold price was stronger. And frankly, that the peak in our share price of about $27, $28 a share, it was pretty overbought at that point. That implied a discount rate of, I think, 1% to our internal cash flow forecast, which is clearly far too low for a relatively small single asset producer in Zimbabwe. We believe that currently our share price at sort of $12 to $13 is back into buying territory. In terms of our shareholders, management hold about 4%. Alan Gray, a very large South African-based fund management firm, they've got 16%. Sales Promotion Services, that's based in Liechtenstein. They've got 7%, and Framiro is a bunch of South African investors who were previously a shareholder at Blanket. They've got 6%. Names you'd recognise, Vanek have got 4%, and Premier have got about 3%. We've got 12 million shares in issue. Virtually no options outstanding, and as I mentioned before, no debt. The only debt we've got is very small working capital facilities in Zimbabwe of a couple of $100,000. We take our ESG obligations seriously. In recent months, we've published our inaugural ESG report, which provides a lot more information on those areas. And then we've also published an integrated report, which, as well as doing the normal financial disclosures, goes into a huge amount of detail on our corporate governance practices. So we think we've done a lot of work in that area. Just a quick word on COVID. COVID had no effect on production in 2021. It had a minor effect on our costs. As a result of some of the measures we had to take to reduce transmission, but it did have an effect on the progress on the central shaft. That was delayed by about 4 or 5 months. So ordinarily we would have commissioned the central shaft in October 2020. As it turns out, we could only commission it at the end of March 2021, but we've put that behind us now. So COVID's had no effect, no appreciable effect on the business. And just by way of an example, what you see here is an example of a clinic that we built for the benefit of the local community at a cost of about $460,000. So even though COVID's had no effect on our operations, we have been obliged to increase our contributions to the local community to assist them in this area. The only significant operating difficulty we face in Zimbabwe is electricity. There's a double-pronged problem. The first is we do get outages because Zimbabwe doesn't generate enough power to cover its own requirements. And secondly, the power that we get is subject to peaks and troughs in the voltage, which can damage our own equipment. So to mitigate the adverse effects of that, but I would say we do have standby diesel gensets, so we can run everything at the mine, underground, the capital projects, the metallurgical plant using diesel gensets. So we can certainly manage those difficulties. But to provide a sort of more long-term solution, we've embarked on the first phase of a solar project. We're spending about $14 million on a 14 MVA solar project, which will provide about 27% of Blanket's average daily usage. And that should come on stream sort of March or April 2022. And that will be a first phase of a solar project. And we do intend to build on that footprint in future. Well, let's talk about the central shaft, which really underpins the near-term growth prospects. What we've done is we've sunk a 6-meter diameter 4-compartment shaft from surface to 1,200 meters. That was fully commissioned at the end of March. That shaft is now busy hoisting waste as we complete the underground development to connect the shaft bottom to the working areas. And as you'll see in a moment, that will give us access for mining and exploration below 750 meters, which will improve operational performance. And allow us also to do more exploration to hopefully extend the mine life. So effectively what we've done is we're building a new mine underneath the old mining operation. We've spent about $67 million on that since 2015, all of which has been funded from internal cash flows. So what you see here is a long section of the mining area. It's about 3 kilometers from left to right. And we exploit a series of near vertical ore bodies. So on the left, you've got Lima, and on the right, you've got Jethro. And we bought this mine in 2006 from Kinross. The mine itself has been operating since 1905. And the infrastructure that was there when we bought the mine off Kinross is shown in green. So it's really the number 4 shaft, and then horizontal development towards the left on three levels. And you can see quite clearly that the existing infrastructure in green was giving us access to areas that are now largely been mined out. And the future of the mine lies at depth below 750 meters. So you can see quite clearly the central shaft in red going down the middle of the mining area, and then horizontal development in 2 directions on 3 levels, giving us access to those resources below 750. So that will allow us to increase production to 80,000 ounces, but it will also give us the flexibility to do more exploration, deep level exploration from underground cubbies, which will hopefully allow us to extend the mine life beyond the current horizon of 2034. Well, let's talk about some of the new opportunities in Zimbabwe. It's fair to say that over the last several decades, Zimbabwe has been underexplored because of the difficult economic conditions in the country and the somewhat unfriendly regulations for mining companies. What we've done is we've most recently, last week, we announced that we've acquired, or we are in the process of acquiring claims at Marley Green in the Gweru mining district. The total consideration will be is $4 million US, and already there is an inferred resource of about 940,000 ounces at a grade of about 1.9 grams a ton. The vast majority of that existing resource base is shallow enough to support an open pit operation. So the idea is that we will complete that transaction in the next few weeks, and then we intend to spend a few $1 million over the next few years to initially focus on the existing resource base to improve the confidence level of that existing resource so that we can start mining as quickly as possible, and then thereafter do further exploration both at depth and in other areas on the property, with a view to hopefully extending that mine life out further. So we're very excited about Marley Green. Then in addition, a transaction that we announced late last year is at Connemara North. That's an option transaction, so we have 18 months to do exploration on that property. That option expires in May next year, and if we like what we see, we can then exercise the option and acquire that property for a further payment of $5 million. We do take our CSR responsibilities seriously. Our CSR is focused on the 5 pillars of education, health, agriculture, environment, and women and youth empowerment. And again, more information on that is set out in the CSR report, which we published earlier on this year. So in terms of an outlook, we believe we're a company that's established a fantastic base. The Blanket Mine in Zimbabwe, highly profitable, highly cash generative, but with significant future upside potential. So we're increasing production to 80,000 ounces from 2022 onwards. That we do expect to give rise to increased cash flows due to higher production, lower unit costs, and then eventually falling capex. We can continue deep level exploration with a view to extending the life of mine. We've demonstrated over the past many years a commitment to return money to shareholders, and more recently a willingness to increase our dividend distributions as our cash generation improves. We have near to exploration potential both at Connemara North and Marley Green. And in addition, we're also continued to look at new additional investment opportunities where that's over and above Connemara North and Marley Green, where we can further invest for future growth. So in terms of contacts, there's some information here. Myself and Camilla, based in London, WH Ireland, produce research in the UK, and in the US, Cantor Fitzgerald. So with that, thank you very much.